Hello and welcome to this video. So this is a question from FAC3761, Tatito 108 of 2022. So this is question 9. So I'm going to go through the big questions of this required. So there are, I think, 3 or 4 big questions within this required, and then I'll be answering those. There are 2 questions, which is 3 and 2 marks each. I'm not going to be covering that. So how I'm going to structure this videos is as follows. I'm going to read the scenario that is relevant to the required, because they're broken up nicely into various parts. So I'll only read the sections that is relevant to the required. So for required A, I'll read the relevant section. I'll break up the question in that way. So I'll have about 3 to 4 videos, depending on the number of the requires that I'll be covering. I will be covering the requires that have big marks. So let's get straight into it. So I'll be reading this because part A is got to do with this extraction machine. Okay, so I will be reading this question and then I will jump straight into Excel to answer it. And then in the next video, I'll do the next required. So let's jump straight into it. So they say Eco Beauty Ltd is a company specializing in the manufacturing of eco-friendly beauty products. Now take note, their core business is about selling manufactured eco-friendly beauty products. So any beauty products that they manufacture, that would be the inventory, and the beauty products that they sell, that would be revenue. Okay, that's very important to understand. So only beauty products, so the revenue will only be that of beauty products that are sold. Okay, so it's what you sell in the ordinary course of business. Okay, so just take note of that. Then they say the company has branches in Cape Town and Pretoria, and the company has a 29 February year end. So that means if a year ends 29 February, that means it must have started 1 March. So it is 1 March to 29 February. Okay, so just keep that in your head or write it down somewhere. So I'm going to read this and then I'll go to the required. So the extraction machine. So they say on 15 March 2019, Eco Beauty Ltd purchased an extraction machine from a supplier in the United States of America at a cost of $15,000. The machine was shipped free. The machine was shipped free on board on 1 April 2019. That means on that date, that is when risk and rewards of ownership transfer. So because that is the date when risk and rewards of ownership transfer, that is the date when you first recognize the asset. So that would be initial recognition. So 1 April is the initial recognition. Okay, so just take note of that. Eco Beauty Ltd negotiated the following payment terms with the supplier. 10% of the cost is immediately payable as a deposit on 1 April 2019. $5,000 is payable on 31 July 2019, and $8,500 is payable on 31 March 2020. The machine was available for use as intended by management on 1 July 2019. So what's important about that? From 1 July 2019, it's the date when you start, when you must start depreciating. Remember, they can give you 3 dates. 1, the date it was purchased. 2, the date it was ready or available for use. And 3, it can be the date it was actually used. So when you depreciate, so you start depreciating when the asset is ready or available for use. So you can't do it on 1 April. Although 1 April is the date it was first brought onto our books, we can't depreciate it from that date. So when do we depreciate it? 1 July 2019, because that is the date it became available or ready for use. Okay. On acquisition date, it was estimated that the machine had a residual value of $55,000 and a useful life of 5 years was allocated to it. The following exchange rates are applicable. So they give us an exchange rate on 15 March when we purchased the item, 1 April, and that when the risk and rewards of ownership transfer, 31 July, when a second payment is made, 29 February 2020, that is the financial year end, and then 31 March 2020, that is when the third and final payment is made. Okay, so the required for this is as follows. Required for Part B, prepare all the general journal entries, including cash transactions, but excluding depreciation, relevant to the dates indicated below in the accounting records of Eco Beauty Ltd, to correctly account for the acquisition of the new extraction machine and the related creditor. So it's 1 April 2019 and 31 July 2019. So let's jump straight over. Okay, so this is that letter 108 of 2022, and it's okay, and it's FAC3761. Okay, so it is question 9. Okay, so question QA. So we need to do the general journal entries for 1 April. So 1 April 2019. So remember, there's no journal entries on 15 March. 15 March is basically when we placed the order. So no accounting entries happen on that date. Okay, so just be aware of that. So the first entry will be on the date of acquisition, which is the date when risk and laws of ownership transfer from the seller to us, the buyer, and that is 1 April 2019. Okay, the next date they want is 31 July 2019. So what happened on 1 July 2019? What happened on 1 April 2019? That is the date when the risk and rewards of ownership transfer from the seller to us, the buyer. So that is the initial recognition. At initial recognition, that is when we recognize the asset, and that is the date when we first measure the asset. Okay, so what are we going to recognize? We're going to recognize PPE machinery. And so we recognize PPE machinery, and we're going to recognize a creditor, and we're going to recognize bank. Okay, because we paid 10%. These are all SFPs. Okay, so those are all SFPs. Okay, so what are we going to have? So what did we purchase? We purchased an item, $15,000, and it was on 1 April 2019. So we use the spot rate at the date. So it's 1416. So we use the spot rate at the date of initial recognition. Okay, so this will be equal 15,123 times 1416. So we acquired an asset. Assets are increasing. Okay, assets increase on the debit side. So we bought machinery. Machinery is increasing. Machinery is an asset. Therefore assets are increasing. Assets increase on the debit side. Okay, then we made a payment. We made a payment, but of how much? 10% of the purchase price at the same exchange rate, which was also on 1 April 2016. So it's equal to 15,123 times 10% times 1416. So basically what would happen over here is we simply take the balancing figure, or you can work it out, which is 15,000. So because we paid 10%, that means we owe 90%, and will be at the same exchange rate. So 15 times 90% times what now? 1416. Okay, so there we go. Okay, so you're going to keep track of yourself regarding this. I'll just show you a simple table you can use. So we can have date description USD rate zone. Okay, so 1 April 2019, purchase, what was it, 15,000, the rate 1416. So therefore this would be that times that. Okay, then on the same date we made a payment. Okay, how much did we pay? We paid 15,000 times 10%, which is 1,500. Needs to be negative because it's decreasing. What was the rate? 1416, and whatever the exchange rate is. Okay, so therefore the balance on the same date, so the balance over here would simply be that. Okay, so there we get the 13,500, which would be the balance. So there you can see, there we have our numbers. Okay. Okay, so there we go. So that is what happened over there. So that's all that happening on 1 April 2019. Now on 31 July, what happened? We made a payment. Okay, so we're making a payment of $5,000. Before we make a payment, it's just best to always do a forex adjustment. Okay, so we first do a forex. So whenever a transaction happens, first do a forex adjustment. So we have 31 July 2019. This is the next transaction. Okay, so that is when a payment is taking place. But before we make the payment, let's first do a forex adjustment on the entire balance. Okay, so let's do a forex adjustment. So the forex adjustment, there will be no impact on the USD amount, no exchange rate, but it's simply going to be the balance 13,500 multiplied by the latest exchange rate, which is 1433, minus the last exchange rate, which is 1416. So let me just show you. If I go back up to the scenario, we are on 31 July. So the exchange on 31 July is 1433. The last exchange rate we used was 1 April, which is 1416. Okay, so now what we are doing over here, if we have to make a payment today, we have to pay based on an exchange rate of 1433. Had we paid on 1 April, we would have paid 1416. So therefore, we're going to make a bigger payment now. So that is a loss to the company. Okay, so it's going to be equal 13,500 multiplied by 1433 minus 1416. Okay, so that is a loss to the company because we have to pay more. So what I'll do over here, I'll say forex loss. It is P&L, and it is okay, and it will be creditor with SFP. Okay, so what's the calculation? 13,500 multiplied by, wait, I'll just take that there. Okay, simply that calculation over there. So if we say equal 13,500 multiplied by 14.33 minus 14.16. Okay, so the question I often get is, how do I know I must creditors? Okay, so the way you think about it is as follows. If I paid on 1 April, the last date, okay, I would have paid based on 14.16 Rand. But now that I'm paying on 31 July, I'm actually paying 14.33. So I'm paying more now. So therefore, creditors needs to increase. For creditors to increase, creditors is a liability. That means liabilities are increasing. Liabilities increase on the credit side. For every credit, there must be a debit. So we're taking it to a debit, and as a forex adjustment. So because it's a debit is an expense in the profit or loss. So therefore, it's a forex loss, or whatever you want to call it, foreign exchange loss. Okay, I'm just using forex, but you will probably call it foreign exchange loss. Okay, so just take note of that. Now we make the payment. So the payment would be so we're making a payment, so therefore cash is decreasing. Cash is an asset, so assets are decreasing. So we're gonna, and assets decrease on the credit side. So we're gonna say credit bank. For every credit, there must be a debit. We're making a payment to the creditor, so therefore creditors are decreasing. Okay, so it'll be SFP and SFP. Okay, so we're making a payment. How much are we paying? 5,000, and we're paying at 14.33. So equal 5,000 times 14.33. Okay, and then there we go. So that's basically the 10 marks. Easy peasy. Okay, so I'm pretty sure it is not too hard for you. It's quite simple. You most likely quite used to it already. So I doubt it will be I doubt it's actually difficult, because obviously from your perspective you have dealt with a lot more complex questions. So if I want to put this in over here, I want to put this in over here. Okay, it's going to be payment. I'm just going to copy this out. Okay, what are we paying? We are paying 5,000. At what rate are we paying? 14.33. Okay, so there we go. Then we will have the balance. Okay, and here we have balance. Okay, so the balance is simply going to be okay, so that is basically it. I just want to take it a little bit further. They just say they asked you for the entire year. Okay, they just say, or for everything within the question. So I'm gonna make it gray because it's not part of the scenario. But if it had to be, so in the next journal entry, because the last payment is 31 March. 31 March is after the financial year end. So therefore, the next date would be the financial year end, which is 29 Feb 2020. Okay. Once again, whenever there's a transaction, so you first would translate. So there's no real transaction, but there's an accounting transaction. So at year end, we need to translate the creditor. Okay, so we need to translate the creditor at year end because a creditor is a monetary item. So all monetary items that have a forex implication needs to be translated at year end. So at year end, the exchange rate is 14.25. Okay, so you can see at 1 July, at 31 July, it's 14.33. We're now taking it down to 14.25. So that means creditors must decrease. If we were to pay today, we would be paying based on 14.25, which is lower than the previous rate of 14.33. So therefore, creditors needs to decrease. So if creditors are decreasing, creditors is a liability, therefore liabilities are decreasing. Liabilities decrease on the debit side. So for every credit, there will be a debit. Okay, so debit, the credit would be forex gain, and that would be P&L. Okay, so what would be the adjustment? Our balance is 8,500, so it would be 8,500 multiplied by 14.25 minus 1433. Okay, so it'll be equal 8,500 multiplied by 1425 minus 1433. We can do the same thing over here. So we will just say 29 Feb 2020, Forex adjustment, there'll be no impact. So it will simply be that. Okay, will simply be that. So remember, we can't have negatives. We can't have negatives in journals. Okay. So now once again at 29 Feb 2020, balance. This is going to be the sum. You can see at financial year end, with the translation, the forex remained the same, okay, because there was no payment or anything of that nature. Okay, so now the next date, is when payment happened, 31 March 2020. Okay, so what we must do over here, we first do a forex adjustment. Okay, so that's the first thing that we need to do. We're going to make a payment on 31 March, but before we make a payment, we first do a forex adjustment. What's the forex adjustment? 8,500 multiplied by, let's just go see what was the exchange rate. So it went up to 1429. Had we paid on 29 Feb, we'd have paid based on 1425. But now we're going to be paying based on 1429, which is higher. So therefore, liabilities will increase. Okay, so therefore liabilities will increase. So creditors are increasing. Creditors is a liability. Liabilities increase on the credit side. Okay, so we're going to say credit with that amount, 1425. Okay, so we're going to say equal 8,500 multiplied by 14.29 minus 14.25. Okay, and that's going to be a forex loss. So why is it the forex loss? Because liabilities are increasing, so we're paying more, so we are losing out. Okay, so it's a loss to us. And there'll be no impact over here. Then on the same date, we're going to be making a payment. How much are we paying? So we are paying 8,500. The exchange rate we are paying on is based on 1429. So if we use the formula, we are paying that. Make it negative is making a payment. Did I just do here now? Oh. Okay, so now what are we going to be doing? Now we're going to work out the balance. Okay. So as you can see, what happened, everything is 0. So now we owe them nothing. Okay, so just take note of that. That's all I just basically wanted to show. Okay, so on 31 March, on 31 March, on 31 March, we're basically doing that. So remember, everything below the gray is not part of the solution. I'm just doing it for completeness purposes. So 31 March, we're going to say credit bank, debit creditors, with this over here, 8,500 multiplied by 14.29. Okay, so that is basically, if you had to do all the journals relating to this, besides now depreciation. Okay, for depreciation, just as a side, how do you deal with depreciation? So for depreciation, what you might just know, in the 2020 financial year, it will run from 1 July 2019 to 29 Feb 2020. Why 1 July? That's the date is ready for use. So if we count July, August, September, October, November, December, January, February, it would be 8 months. Okay, so that is 8 months. Okay, so just take note of that. So to look as follows: cost, residual value, and that would give us depreciable amount. Okay, depreciable amount. Okay, then we have useful life, and that will give us what we call this now, annual depreciation. Okay, so annual depreciation, and then we would say number of months used in year, and that will give us depreciation for the year. Depreciation for the year. Okay, so the cost would be what we recognize at initial recognition, which was that. Okay, what did they tell us the residual value was? 55,000 Rand. So equal negative 55. Okay, so depreciable amount is the sum. Okay, useful life is 5 years. So annual depreciation is that divided by that. So annual depreciation is 31,480. But for the 2020 financial year, we didn't use it for the full 12 months. So therefore, we're going to say that divided by 12 times 8. So the depreciation for the year would have been that. So at 29 Feb, we'd have said depreciation, okay, P&L, and we'd say accumulated depreciation, machinery, SFP, debit with that amount, and then credit with the same. Okay, so just take note. That is just basically a full-on question, but just remember, I'm just doing this from everything below the gray line is not part of the solution. Okay. Okay, so thank you very much for that part. I'm going to stop over here and I'll do a video on the next question just to show you quickly I will do a question on, where's the required now? Part B, the 7.5 marks, and then I will do part C. Okay, so part B and part C. I'm not going to do part D. I'm not going to do part E. Depending on time, I may do part F. Okay, thank you very much. Bye-bye.